Folks, good morning. Welcome back. Welcome back. I'm here with Caleb again. We're going to talk about our new week when we have CPI and PPI numbers on Tuesday and Wednesday, and the Fed chairman speaking on both days as well. This can go one of two ways, and I'll show you here what I mean. Go to the economic calendar. You see, we have nothing on the docket today. On Tuesday, we have PPI and CPI. I'm sorry, CPI on Tuesday. Wednesday, we have PPI, and we have Fed chair speaking at 10 a.m. both days. So this is going to be absolutely insane volatility in the morning session. PM session probably going to be the better, I guess, more discernible price run. So I won't be participating so much in the morning session. I'll be looking for PM session. So I may provide some kind of lecture around that. Then on Thursday, we have medium impact stuff that's not all that great. And then we have consumer sentiment on Friday at 10 a.m. So that rounds out this week, but it's a heavy hitter in terms of news. All right, so we have the daily chart. I've stripped everything away and I just want to get a fresh perspective on price. How you doing this morning?
I'm doing well.
I feel rough. I feel rough. All right, so as I mentioned, for the folks who have been following along the last 6 or 7 weeks in terms of the analysis I've shared from the daily perspective, that we are inside this big range, okay? And what we have just done today, we've had a drop down in between the two wicks. Now there's a volume imbalance at the low. So we have done this much, okay? And I'm gonna change that to gray because I don't want to imply a direction yet. I'm still trying to flesh this out while we're looking at it. But we've done enough here to trade into a discount. We have this wick to the left of us, so you always want to grade that. Take the fib on there and just show the 50% level. Just consequent encouragement of the previous day or last Friday's discount wick, but it could act just simply as a premium array. Any movement above this on a closing basis on this daily chart would warrant likely higher prices. Next one would be consequent encroachment of this wick. Okay, but we're not going to do that now. We're looking at just intraday charts. So what does the economic calendar suggest for today? Since there's no news today, usually no news can be a quiet session, a listless trading, lackluster price movement. Other times it could be rather stellar. In this case, we have big news on Tuesday and Wednesday. So it's a 50-50 whether or not we're going to have a nice price run this morning, or everybody's going to just stand aside and let the volatility come in. And then once Wednesday's done, then we'll probably see the cleanest price action Wednesday PM to Friday's close. I don't know what we're going to see this morning, so I'm looking at the charts fresh. I have not looked at the charts over the weekend. I have not paid any attention to Friday's price action. And with that, I just want to have a very, very clean slate. So my perspective is not bringing in a preconceived idea or notion that the market should behave a certain way. I like the fact that we've done this. It has not fully closed in or filled in this with the suspension block. That's the actual perspective right there. But we're going to use just the wicks because that's enough to build an initial idea on. We're going to drop down to a 15-minute time frame. Right, so we had a big new week opening gap here. So where we closed on Friday and where we opened on Sunday. And we didn't close that in entirely. Okay, so there looks a little suspect. Okay, they were able to swipe that. Do we want to go look at that? See how clean that is?
Yes.
So what I'm doing is I'm going through the chart. I'm looking for where it is too smooth, too clean. And these are not the right colors when I'm doing that. So let's change that. And this, okay, a bit different because it's already hit through once. So now I want to see, do we have a willingness to go a little bit lower than this? And if it does, we can trade to here. And I don't see, go back after the daily chart, I don't think I have the intervals showing up in this. So you want to have visibility on you'll be able to see it on the 15-minute time frame. I'll drop back that down. There you go. So we did as much going down into that daily separation between the two wicks, but that's not the fair value gap. It's just part of a imbalance. So I'm looking at this wick here and its consequent encroachment midpoint right there, and that's what we just used. See that? And I suspect that we're probably going to explore lower, but eventually work back up into that new week opening gap and then get to the buy side. I'm trying to refrain from calling the high on the daily chart because they're so rigged. You know, the administration is trying to pad their buddies' pockets out. So it's more rigged, more manipulated than usual. So we had a sensitive reaction there at the low, that imbalance between the two wicks on the daily chart. We also took this short-term low here. We hit an order block, which is this down close candle that was used over here as well. We went a little bit deeper on it now, so we're going to see, does it have the willingness to drop that down into here? And essentially what I'm saying is I'm wanting more information from the opening range, first 30 minutes. So we're going to drop down to a 1 minute time frame with these levels in mind. So we have relative equal highs here, so we have minor buy side there. Why am I calling it minor buy side? Because we have a new week opening gap on Sunday at 6 p.m. here. This is the more prominent buy side. So this is a minor because it's lower than. See, in deference to where that is, where this is minor. It doesn't mean you can't find a good setup. If it wants to run to that, it just means that by contrast, it's not just simply go up here and then it's done. It could potentially keep going back up to new week opening gap, which is why I'm thinking they're going to try to visit that. If not, they'll get to it with the PPI, CPI numbers, that's for certain. It depends on what we see today. So I'm trying to build an idea, excuse me, around what it may do. I want to see higher prices. That's kind of like if you were going to hold a gun to my head and said, all right, Dad, what do you think it's going to do? It's going to go higher or lower? I think it's going to draw higher, but I don't know yet based on what we have in price action because the volatility is so high the first few minutes at 9:30 Eastern time. I don't know where the entry is yet, but I know that I want to look for longs because I think we've done enough to balance out on the daily chart. And that lower suspension block that I showed it. Let me go back to the daily because I know some of you aren't following along, eating Doritos and looking at social media while you're listening to me. This is enough to warrant a little idea to build framework around, but I'm wanting to see that volume imbalance down here act more or less like a breakaway gap where it's not so interested to go back down there. Because if it's not interested to go back down there, that means this sell side liquidity raid there is sufficient enough to send us higher. And in the 1 minute time frame, Let's see if we drop back down into that daily inefficiency that's been shaded in gray between the two wicks. Regular trading hours. Ah, so a lot of movement. So we're going to color this one just because I want it to look different on the chart. And that is where we settled on Friday. There. Let me see, make sure I got that right price. Close 48.5. 48.5 is highlighted. So let's go back in into electronic trading hours. So at 9:30, that'll start us back on regular trading hours. And the gap difference from where it closed on Friday to where we are is significant, which is another reason why I think we're going to go up, because it's a huge gap. Gaps tend to fill in, or make an attempt to fill in, let's put it that way. Because the market is predominantly predisposed to go higher. It's built as a Ponzi scheme that goes in perpetuity. They go higher. Okay, stock prices are meant to go higher, to lure in new venture capital investors, and they got to keep the Ponzi going. So it's more likely that we'll at least draw towards this purple line. It doesn't need to get there. This between where we are going to open up at 9:30, which we are not there yet. We got about 5 minutes now. We want to see it gravitate towards the buy side, and then in this direction of this 30,048.5 level. Don't see anything yet, so we have to give it a little bit of time. At the open, what I want to do is show you, this is how I prepare myself when we have a pretty significant gap like this. You want to grab your fib, put it right on the level. Okay, so I'll try to get as close as I can. Right there, 48.50 is the level, and I'm dropping it down, and I'm finding, look at the time axis at the bottom. See how it's 9:37, 32, there's 30. I don't want to have it right there because I want to watch the candle open. So I go to like 32 or 33. And we'll just do 34 because people are going to say Illuminati is 33. And then highlight this, show all levels. So you have all the octants. And that one. Maybe halfway, which we'll do that with black. All right. And we'll make it a little bit beefier because we want it to stand out and we don't want that white dots. It's easier on the eyes for the old man. So here is consequent encroachment of the opening range gap for regular trading hours. So RTH ORG, that's half gap. So we're going to annotate that now so that way we don't lose sight of what it is and why it's salient. Regular trading hours, opening range gap. C. Regular trading hours. Okay, so that's the business on that. It's a little too much, isn't it? Let's go down. So now we already have our levels now. All we have to do is at 9:30, as soon as that opening price comes on the chart and it pops, all I'm going to do is just drag it over to, like, say, for instance, this is the 9:30. I'm going to drop it right there on the opening price, and then we'll be able to drag this to where that black line is, which is consequent encroachment. You understand?
Yes.
Because otherwise, you don't have any, unless you have something automated, which some of my students have done very well in terms of creating that stuff on, like, free access to it, which is very nice. I still prefer manually doing. I just don't trust. I don't trust the data that sometimes the platform will pipe into it. So I'd rather see it manually and then do it manually. That way, I'm involved in the thought process as to why it's important. Whereas the little scripts that they create, the logic may be sound, but if I see something that doesn't look germane with data, then it's only going to crunch the numbers it's given. Whereas me as the author, I'm looking at this and saying, well, this doesn't jive for me. I'm not going to use that information. I'll use something else instead. So let's move this slide.
Would that remove any of the responsibility of a fail on a trade if you use those types of processes? Since instead of you doing it, they have a system that they programmed to do it? Or would they still be able to say, oh, this was my fault?
No, it's always your fault. The outcome is always your fault. Period. There's no relief of the responsibility of the outcome of a trade. If you made money, then you made money. If you lose, you did something wrong. The operator error. And so many people want to argue and try to find fault because they can't accept the fact that they're going to lose. You're not going to win on every trade. Like chances are I'm probably going to be wrong today. Pretty high I'm going to be wrong today because of the volatility. So we drop down into this right in here. It's a bullish order block. Showing a little bit of sensitivity after taking out that short-term low, which I'll show you in a second. Short-term low, we drop down into the order block, changing state of delivery. Now we popped up in here. So what I want to see is, do they use this as a head fake where people see that as a one to go higher? There's 9:30 opening. Now we got to drop. There we are. And here's the head fake I was just talking about. We're dropping down. Watch this liquidity in here. And consequent encouragement on the regular 20 hours opening range gap is up here. So 70% likelihood it's going to go up here by 10 o'clock. That's usually the statistics. We're going to look and see if we can fade this, run below here. So far, so good. What I want to see is, does it really want to just tap below that? Or is it going to sink down and take out that liquidity we were talking about earlier over there? We only did it like a wick through it the first time. All right, I'm going to use that. Now, of course, we're using TradingView's exceptional service. And you got to wait for like a magazine subscription. You subscribe to it and you got to wait a month for it to come in the mail. So we're going to have to wait and see what the fill is. As long as we stay in the upper half of the wick, I'm okay with it. And I'm only trading with one contract. So it doesn't make a difference to me how much of a drop down in here, as long as the close stays above the halfway point of that. Let's measure that like this. We'll get rid of this, that, and that, and we'll make this green. Actually, we'll make it a darker green. All right, so again, now the stop loss will have to go just back below this low, but below the consequent encouragement level. So that'll look like, oh, I gotta wait now for TradingView to settle down because it can't handle everybody's participation. Again, TradingView, if you're listening, which I'm certain you are, you guys gotta tighten this part up. It's poor service. All right, so the stop loss is just below consequent encouragement, and the regular trading hours opening range gap, mid gap level, CE. We're going to look, see if we can get above this buy side, which is the minor buy side I was telling you about earlier right here. Okay, so since I'm only using one contract, it's got to be managed through the stop loss. There's no ability for me to do partials because I only have a single contract. So for the sake of the day and the economic calendar, It could come down now. Look at that. Looks like it could. Assume that it should be down now. We stopped. Definitely stopped there. All right, so we're gonna see if it wants to go down and take out that lower low here because it only did it on a small little shallow wick. So I'll sell short here at consequent encouragement of this wick. And I'm going to stop right here. And all I'm going to be doing is looking for it to run down to take another stab at that low. And then I'm going to try to reverse and go long and look for this buy side here. So sell side is the draw. There's my stop. One contract again. And we're going to look for it to trade down to there. And the premise is we had a failure to launch after taking an attempt to go lower. You can see it now wilt. This will also upset anyone that wanted to go long for the day, like in the first couple minutes, like we used to try to do. Generally, it kind of causes like a deer in headlight scenario where they're afraid now to re-enter. If it goes down there and takes up the liquidity I'm aiming at right here. But I'm looking for it to go down there to go long and just get back the loss, but and also have some kind of a favorable increase in equity. It's paper trading too, by the way, folks. It's for compliance reasons. I can't tell you what to do with real money. So we're just doing things hypothetically, just like you guys when you trade your prop firms. I don't hate the player, hate the game. All right, same premise here. We want to see the bodies stay below half of this wick in here. So notice what I've done today. Because I'm not 100% sold on the idea where the perfect entry is, I'm exploring. I'm trying to get a feel for what it wants to do because we're Monday. We have a huge, enormous amount of volatility coming in on Tuesday and Wednesday. Because of that, and we have no news today on Monday, and it's not non-farm payroll because non-farm payroll, I'm always trading that Monday. But this is what you can encounter on Monday, and if you're not really versed in knowing what you're looking for, if you don't have a model, or if you're just really undisciplined, you can go out here and just wreck yourself very, very quickly. Because of that, I'm illustrating with one contract. And if you're brand new, you shouldn't be trading with a mini. You should be trading with a micro. But to hold people's attention, they like to look at these little numbers over here instead of watching what the candlestick itself is doing. And they always say, like, show us where it doesn't work. Show us where you failed making it happen. What a positive outcome. There's benefit in that. Sure, there's benefit, but there has to be a context and a setting where if I'm forcing the stuff that I teach and use in like this climate here, this isn't a day I'm going to say, well, let's go out here and go and max out my AMP account and do as many contracts as they'll allow me to do and see what happens. This is a day where you want to test the waters and see what the market's trying to do. Because we just had, a senator in the U.S. just expired. We're trying to figure out if it was some tomfoolery behind that or if it was just a natural progress of getting older. But there's things that people are weighing from a sentiment basis. And people might say, well, what is one guy in Carolina who miraculously always gets voted in, but nobody really says they vote for him. Now he's gone. So I'm trying to get a feel for that. There may be a little bit of concern about those type of things that may lead to a greater conspiracy. And the rumor is, not the rumor, but the notion is buy the rumor, sell the fact. So if there's legs behind a story, the market will use it. But when everybody knows about it, don't believe it anymore. Like, for instance, when Monty was telling me, hey, do you trade Bitcoin? You ought to buy Bitcoin. It's going up. And I said, right away, went on the Twitter, I said, if you're long Bitcoin, sell it. Because it's not going to go to 20,000 now. It's definitely going to drop. Because my wife, who knows nothing about trading, thinks it's a video game.
Yep.
She asked me if I was buying Bitcoin and told me I should buy it. So if she, knowing nothing, if she's now saying it's time to buy Bitcoin, this is before it went to 20,000 the first time. Immediately, that was the top. That day was the top, and it went lower from there all the way down to 3,000. 3,300, I think it was. 3,600, something to that effect. So on a day like this, what we're doing is we're trying to explore what the market wants to do, what it's not willing to do, and then stand out of its, get out of its way rather on Tuesday and Wednesday in the morning sessions, preferably entering and managing positions in the PM session over trying to participate in the gambling session that the PPI and the CPI numbers promote, because they're runaway trains. And if you're wrong bad. Like it'll wreck you immediately. And you see these young guys out there all the time doing 10 contracts and 15 contracts because it's demo trading, but they're trying to get rich on a prop firm.
Yeah. Bulletproof.
Bottom line is you have to have a reason for doing what you're doing. You can't just simply say, well, I'm going for broke, because what are you aiming for? Broke. And you're going to hit that target all the time. You're going to hit that without no effort. So you have to be a little bit more cautious. I want to see if it can break below this one more time, because what we've done is got real close to, if not already, traded to, I'm going to use this low here, this low to this right there. So it got right to almost event horizon, but it didn't get to it yet. So I want to see if it can go below that. Then I'll lower the stop down to here, and it'll just basically be a break even type thing. And again, no market replay. So we can take a paper cut, and it's not a big deal.
Is that a phrase you use often, or you just come up with that?
What's that?
Paper cut, because we're paper trading. Was that a?
No, it's just it's something else. I mean, it's not just dads. I mean, people say it all the time.
Oh.
Death by 1,000 paper cuts. That's what trading is mostly with retail traders when they first get into trading.
Mm-hmm.
Even if they trade with a little bit of leverage, if they have no model, they have no discipline, they'll die by 1,000 paper cuts. Small little losses that over and over and over again will eventually just bleed you out. So just a little bit more pop down through there, and there you go. Right to the level, didn't fill. That's classic. Again, it's already done that little bit of a wick through it here once before. So what we're seeing is if it wants to give a little bit more beefier, pronounced run with the body, and I'll show you what I mean by that. Over here, see how the body stayed there? And we had that little bit of a wick. I want to see if it can put the body down below it. So bury a body underneath that level is much more significant than just doing wicks. In the beginning, everybody tries to avoid issue fill. They try to avoid taking a loss. And there's no reason to be afraid of a loss. I mean, if you're reckless and you have no concern for the risks that you're entailing, then obviously you should be afraid of losses, because you're out of control. You're like a drunk in a bar with a credit card with no limit. Like you're going to do serious harm to yourself and other people around you. Here we have no reason to be afraid of the loss, because we're trading with one contract. We're being measured about what it is that we're looking for, what we're trying to do, what we're trying to accomplish. And now, since we've done this, we went one more time lower. My interest is now, does it want to reject this? Because now we have a minor buy side here. If you hear my wife in the background, she's decided to audition for a cooking show. So I'm gonna hear her beating up eggs and pretend like she's the only one in the house. So this is the order block level. So I'm gonna take that off. This is a little bit confusing. We don't need that now. And we worked this level here. So you saw that I did the probe of one contract, see if it can get that run up in towards gap closure. And then when it failed, I knew what I was looking for as the opposite side. Now, it doesn't mean if you take a loss going long, it's always a sell short. It doesn't mean that at all. If you remember what we were talking about when we first opened up the session, that was outlining how the bulk of the news influence and the volatility injection because of the news events, CPI and PPI on Tuesday and Wednesday, things go back to like normal business post Wednesday. So PM session on Wednesday, then Thursday and Friday should be really nice, clean trading. Here, it requires a whole lot more thought process, a whole lot of weighing out if then statements with your interest of buying or selling. You don't want to come in with a hard bias. You don't want to do that because when the economic calendar is dictating the pace of how much volatility is coming in, like we have for this week, and we have no volatility expected because of news related today. There's nothing news related for Monday's trading. So you have to lean heavily on just simply the price action and experience, which is the reason why I tell students try not to trade on Mondays because Mondays are it's the manipulation and accumulation part of the week, the first day of the week. And a lot of people I taught around the world, have turned to like villain arcs. They're like, I learned from him, but now I'm going to be a rogue, thorn in the side. The master in our dojo said, "Don't trade on Mondays," but I've attained a higher level of, ability, and now I can trade on Mondays. So listen to me, not listen to him.
I've surpassed the black belt.
Yeah. So they don't want to listen to Splinter anymore. Yeah, they want to listen to Shredder. So, and then when they shred their account because they're trying to do all these things extra, instead of being more disciplined and saying, "Okay, I'm requiring a little bit more time to cure as a trader," and having no concern for rules or parameters. I mean, it's like the yellow line in the street. If you stay on the right side of the yellow line, 90% of the accidents you will avoid them. But that's not 100% avoidance. So there are rules to when I tell new traders when not to trade on Mondays. And it's predominantly every Monday except for non-farm payroll. Why is Monday so good to be traded on non-farm payroll? Because all the end of the week, post morning session of Wednesday, it's all event driven and you don't know what they're going to do. I don't know what they're going to do. So I know the cleanest price action tends to be on a Monday of non-farm payroll week. So that's always every Monday trading should be done on that. If you're brand new, just try to study price action on a Monday and be okay with the market creating some seller price run that you may not have participated in. That's the problem with these people out there. They have tried to become mentors when they really don't know what they're doing. They just want to be recognized as someone that knows more than most people and looked up to. That's really what it's all about. They want to have a sense of notoriety and significance. And not even really motivated more by the money. They just want to seem like a pillar in the community. Pride. So when we have people like that promoting the idea that you should do what he tells you not to, when I say don't trade on Mondays if you're brand new, it doesn't mean that someone that has more experience can't trade on Monday. It just means that, like you just watched this morning, because I wasn't confident, starting the week, we had, significant news that could be used as a mask, it could smoke to cause the distraction of the price action runs that they're going to now present in the marketplace. Now, see how it's created this low right here on my exit candle, and then we dove down real aggressive, and now we're trying to look like we're trying to get back above this high here. If we can mount a run back higher above this low, the fair value gap that forms bullishly after that will usually send us up into the buy side and then up into here, and then likely draw that buy side and see if we can get up into a more closer to consequent approach on the opening range gap. So if we look at it through the lens of regular trading hours, this is what we see. An enormous gap still from here down to here where we open. So this is all inefficiency. So I want to see it fail to go lower here and then start going higher. And then the rest of the day or going into tomorrow, we'll be trying to get up into this area here. Does that make sense? Because there's nothing on the chart. It's a vacuum of price. This is a real liquidity void between this candlestick's low and this candlestick's high. That is a liquidity void because there's no print at all in regular trading hours delivery. It doesn't matter if electronic trading hours posted through that because regular trading hours has to balance out electronic trading hours to be an efficiently delivered price. It can't just exist on one session. Let's say it this way. It can, and that creates imbalances and inefficiencies that are only seen in one session, being either electronic trading or regular trading. But regular trading has more weight behind it. Let's say it this way. I place more emphasis on regular trading hours than electronic trading hours because regular trading hours tends to overlap and re-deliver to levels that electronic trading has seen and delivered overnight. Well, we've been trading since 6 p.m. last night, Sunday, Eastern time. So whatever those levels were, we haven't done that yet in regular trading hours. So that's why it's more interesting for me to try to go up in this gap where there's no prints at all in regular trading hours. I can be wrong. It could drop right from here and just keep going lower. But more times than not, it's going to adhere to this logic than to do the other. Does that make sense?
Yeah.
Sorry, I had to yell at my wife, threaten her with a divorce. So, here we are here. See how it's gotten to our target? Now it's got a little bit muddy in here. So I want to see it really mount up in a campaign to go higher to get back above this low. If it can't do it by 10, then I'll bail with watching what price is doing. If it starts to go lower and it gets into event horizon between these two levels, then my interest is abated as well. So we're going to do this. Where's the price? Can't see it because it's
69. It was at 69 flat.
Let's see. 64 half. 64 half. I think it just moved. It doesn't have to be all that perfect, but this is good enough. And if you ever want to change it, just check your coordinates. And there's half, and we'll leave the other in there. So there's event horizon there. So old low. How far is this? Relative equal lows. And I was telling you when we first opened up, those are interesting to me. So those relative equal lows are down there. Event horizons here. If it closes below that, then we're probably going to keep wilting to go down into those relative equal lows. So we had this little inefficiency right here at event horizon. See that? Event horizon between this low and the other lower low that's been highlighted in red. The open on the candlestick here, we had just a little bit of a rally, a little bit, and then gave up the ghost. So they're really pushing this narrative, lower prices. I'm going to go back out to the daily chart. Yeah, daily chart. And we're going to drop this little thing down to the volume imbalance. Right down here. So I'm dragging this down here. So I'm incorporating the volume imbalance between these two candlesticks. Remember I was telling you at the beginning of the video? or the session we're doing here. Zoom in. So here's that volume I was saying earlier. So it could draw down into that. All right, so we have this is really hard to do with 16 different laptops. You got to keep going back and forth and highlighting. These guys on the internet, man, they got stories. I would say this should really sell off now hard. It's got the right market structure in here. It came back up into this little gap here. And if it starts to sell off, it can get to event horizon, and close below event horizon would warrant a run below those relative equal lows around 395 even. Anything above here sets the tone for a run back above this high. And I'm only going to watch it till 10:10. So we only got 14 minutes left of this. We'll just tape read the rest of the session. So 2 executions, 1 scratch, minor little ding, and then came back for pretty positive outcome. So it needs to be this candle or the very next candle that it drops. If it's going to go lower, it needs to do that because we're in this inefficiency. We had 1 candle and we're in the second candle here. You don't want to see a crowded house inside of an inefficiency is not something you want. We're not trying to do a block party inside of one little space between 2 times. So we want to see it now displace aggressively lower. Otherwise, we're going to a different neighborhood, and that's going to be up here and then up here. Inefficiencies, you want to have 1, 2 at most. 3, the probabilities start to shift lower if you're booking 3 to 5 candles inside that inefficiency. You don't want to see that. A market that's in a hurry to get somewhere doesn't want to go in the gap. A market that wants to go in the gap 1 candle and not leave a body there and not close it entirely or even trade to half its range or consequent encroachment, that's a market that is in a hurry to get somewhere. But when you start seeing, like, see it's sending way too much time in here. Okay, so support resistance folks, they're looking at that here. That as, oh, it's support broken, turn resistance. I'm looking at that inefficiency in there that should warrant more intel. And the fact that we're spending so many candles inside of this. Look at it like this, son. We have that to that. Okay. So why, if it's bearish, why is it spending so much time in that? You see? Mm-hmm. So it's, as soon as people say, oh, you count candles. You're always trading on the 13th candle and the 17th candle and the 21st candle. They're all looking for something they can market.
I was going to say, that seems a little crazy.
It's nuts. And the only time I'm counting candles is when we're inside inefficiencies. Because you don't want a lot of candles in that little range of inefficiency and price action. We're already at like 1, 2, 3, 4. This is the 5th one. No more than 5 candles. This is the last ditch. It's got to do it now or it's failing. That's the logic I go with. And already, like, even if this thing was to drop, I don't like this. Think about it. Say you use this as an entry. Not that you should, because you'd be selling short in a extreme discount from the daily high of regular trading hours to the daily low, and you're trying to sell right there at the low. That right there goes against what I taught in the very first month of my paid mentorship on the YouTube channel. So my month 1 of 2016 private mentorship, that playlist, if you just listen to that first 4 videos, you already know more than 99% of everybody else out there trading. I don't care what they use. You know more than they do. And you can trade more efficiently and consistently if you adhere to the logic and try not to add on to it. Look what it's done. So when you see these people, when I first started teaching fair value gaps, everybody in other type of disciplines, they'd say, oh, look at this fair value gap. It failed here. Huh? They're not realizing that it's in a discount. It's dropped straight from Jump Street. And you don't want to sell in a discount. You want to buy in a discount. Okay. So now because this has failed to offer premium sensitivity where it shows it unwilling to go higher and it falls lower, we spent too many candles in here. That lesson in this lecture in and of itself is enough to people that watch it should be like, you know what, that's useful information. But largely it goes unnoticed because they want to know how to get the right entries. When sometimes you don't have that intel afforded to you in the beginning. You don't have the odds in your favor, but you have to recognize when the odds are stacking against you and identifying what it looks like. If you don't know that, you're chasing of the money, you're chasing of notoriety on the internet because you want to show a trade that you took. You know, look what I did. Haha. You know, they're more concerned about that than how can I preserve my capital and preserve my mental capital so that way I'm not stressing myself out, forcing an idea in the market where it isn't likely to occur. So there are times you want to see my PDAs failing. The PD array needs to show certain signatures for them to be valid and confirming with your expectation and price action. But if you can recognize when they're not confirming, that's not failure in the sense that they've changed the algorithm or it's the new retail. Everybody out there is trying to create an image for themselves. They're trying to brand, okay? And they're never catching up to the old man. They're never going to do it, okay? So you might as well just subscribe to the views that I'm teaching because that's it. I was doing a test yesterday. I went on AI, couple different AIs, and I asked AI, I said, give me a easy to follow intraday idea on when I can enter a short or a long and how I can target a profitable exit. You know what they were posting as a response to me? Fair value gaps, runs on liquidity, breaks in shifts in market structure, and macro times. Now, you don't think that the industry has caught on to what I've been teaching? Think about that. I didn't put those things in the request. I said, just give me a simple approach to trading intraday, how I can time a entry, buying long or going short, and how would I draw a target to assume a profitable exit in either. And then they start spitting out my terminology. Now, how's this guy? He didn't go through the mentorship. the guy created an AI. He didn't go through the mentorship, but because the infection I created, the ICT has infected the internet. Now the world knows look for these types of things because it works. It's the market. Okay, you don't have to look for something better than mine because I am the market. My logic is the algorithm. My enigma is the algorithm being implemented with price action and time. So when you blend all those things, you are light years ahead of everybody else because they're looking for patterns. They're looking for indicators. They're looking for some kind of little gizmo to highlight something, you know, a yin and yang symbol, something like that.
Yeah.
When none of that really has any bearing on what price is going to do. And it certainly isn't going to warn when your stuff's likely to fail. And that's maturity as a trader. See, you go into this and like Keaton, he wants to avoid losing. And that's natural. You don't want to have a loss. But see what we did, son? I'll come back to that in a second. We went right back up to that low. Why? Because this failed. That right there is insight. From this level here, going back up just above this old low. That price run, if you didn't expect that, because if this fails, what's it going to do? It's going to draw back up to that low. If you're not aware that that's likely to happen, you could say, oh, no, I'm going to force my will on this. Oh, it could be coming back up for these sell stops. I'm sorry, buy stops here, and I'll sell there. Or I'll sell at the midpoint at event horizon between this one and here. It's probably just retracing. No. Why? Because we had this range from today's regular trading hours high down to this low. We had one low, two low, three low. Then it came all the way back up. So this completely wiped out anybody that's short that trailed their stop loss. So now we have to test and see, does it want to come all the way back down into this and use this as a discount array and then go higher, or does it wilt right through it and come back up and treat it as a bearish fair value gap again to send this back down into lower prices, event horizon there, and then there's relative equal lows, like I said earlier. So there's a whole lot more involved when you're trading Mondays. And the like what I just outlined, I don't expect my new students to know that. So as a responsible educator and a mentor, and the person that knows this stuff, like just because it's mine,
Mm-hmm.
it would be disingenuous as an educator to not tell them this is where you're going to fail most. So if that's where it's likely to fall in the column of where do I usually lose the most on what day of the week, it's going to be Mondays when there is no news and you have big news on Tuesday and Wednesday. It's going to require a whole lot more experience. And how are you going to lean on that if you're brand new? I don't ever tell my mature students that's been with me for a long time, don't trade on Mondays. And they knew when I was teaching, it's in there. If you're new, if you don't have a lot of experience, just avoid trading on Mondays unless it's non-farm payroll week. That's an always trading Monday, always. But it's you listen to these guys that say it's funny because when they first start talking on the internet or they talk to me or whatever, they'll say, "Yeah, I have no really interest in teaching." They're all doing mentorships now. They're all doing paid mentorships. Okay, they have houses they can't afford and they don't have furniture on them yet. They're sleeping on the bed. That's an air mattress on the floor, but they're mentors.
Mm-hmm.
They're criticizing other people.
Mm-hmm.
Crazy, crazy level stuff.